The countdown time has stopped and we are ready to kick off. Thanks for everyone who's popped a response to the poll question there. And it looks like New South Wales is the clear winner here with 50% of people who responded choosing New South Wales. But I do know there is a couple of Queenslanders and Victoria. And there is an other, which I'm a bit confused about because I think 1, 2, 3, 4, I think I've got every state and territory in Australia. So someone is joining from another country or another planet, who knows? But hey, thanks for joining today. And in the next sort of hour to spend with you, I'm hoping to dive quite deep into even like the practical steps we can take to set out budgets for the new financial year. I'm going to be sharing actual things that we do at Inspire. So for my own business, Inspire, but also that we help our clients with going through the detailed process. So, and as normal with our webinars, we want to keep them really interactive. So please pop in questions into the chat box or Q&A. I will definitely get to those and we will ideally have a high value webinar together. All right, before we get stuck into the meaty bit, I do want to mention a couple of webinars we've got or workshops we've got coming up. So the first one here is your SMSF investment strategy. So this is super relevant for clients or people with SMSFs, and we're talking about investment strategies. So there is some compliance rules, and we do get asked from time to time some questions about different types of investments that you can have in your SMSF. So we're going to be covering a lot of questions around that coming into the new financial year as well. We do see also a lot of SMSFs being set up early in the financial year, July, August, September as well. So it's a good time to cover some topics around SMSFs. So if that is of interest, please join along that one. The next one is towards the end of July. We actually, the past month and a bit, we've been doing workshops around Australia called Save Tax and Boost Profits. And we've actually been, we've been asked by a couple of people who couldn't make it to the physical events if we could actually do a virtual one. So we have announced a virtual date, which is Friday the 29th of July. Riz or Rizal and Sakshi are going to co-present that workshop. So it is 4.5 hours long. You'll need some lunch handy as well, but that is focused on those two topics, saving tax and boosting profits. So, and actually there is some interesting things we're going to cover in today's webinar that are very relevant for boosting profits as well. Also, I have seen quite a few clients joining. Hey, I've seen a few more people join already. That's cool. So there are a few clients here, but there are also some names I don't recognize as well. If you do have questions about how we work as accountants, or even, coming up to 30 June is a bit of a crazy time for accountants. But if you do need some last minute help and you're not getting that from your current accountant, then please feel free to book in for a strategy call. I did check this morning and there is availability as soon as, when I checked it this morning, and we had availability this afternoon. So if you leaving it a bit late for 30 June help, but if you do need it, then I'd just jump on that opportunity if you do need some last minute help through one of our strategy calls. And a bit of an update as well. We track the tax savings we make for clients, and it's been incredible this tax funding season. I think there was a week we almost came close to saving $1 million in a single week. So our total tax saving number at the moment is $22 million in tax. That's a huge number. And I think we started this tax planning season at about 19 point something mil. So it's been a good season for our clients. So if you don't know who I am, I might do a short introduction. So my name's Ben Walker. I started Inspire when I was 23 years old. I'm an award-winning chartered accountant. We actually picked up a few more awards recently, which was great. 13 years accounting experience. I co-authored Cashed Up in 2018, and I'm actually in the middle of writing a number of books at the moment. One of those is going to be released in the next few months, so I will be sharing details on that stuff soon as well. And in terms of the special people in my life, this is a photo of me and our family at the beach on a recent holiday. So I've got a lovely wife, Stevie, and two children, Ezra and Rose. So that's a bit of an introduction to me. Now, in terms of the webinar this morning, we are going to get stuck in a sec, but just an overview is ideally when we're looking at budgeting, and especially when we've got a, almost like a changeover time, like the end of financial year coming up, which is literally only in, I think it's 6 more sleeps to 30 June. So we're coming up very close to it, and it's a great opportunity to take stock. It's one of those times in the year that's like a significant change. The goal is to reflect on what's happened, and cast our eyes forward as to what we want to create over the next 12 months. And so, that part of that is a non-financial process and almost like what you want to get out of your life. And then we work backwards from that is how do we make our businesses help provide for our families, and also like your goals and dreams as well. So that's kind of the thought process going through my own head coming up to 30 June. And so I do want to share some of the tips that we do ourselves, and I'll literally get Xero open, show you where to go, walk through some of the things that have really helped me and helped our clients understand, budgeting. And also, like, I feel like budgeting's got a bit of a bad rap. Like, it's, even I don't necessarily like the word, but if it's done well, it can really, really help us as business owners be really clear on what we want from our business, set goals in a really tangible way, like to the dollar figure, but also be able to communicate that with our team. So once we know the profit or the owner's benefits we want from our business, we're able to set KPIs and share those with our team to be able to achieve those goals. So I feel like this is, as much of it's a bit of a topic people loathe, this is like a superpower as a business owner to, I feel, make your dreams become a reality. So yeah, maybe a big statement, but that's how I feel. So in terms of one of the first steps is to actually review profitability, like having a look at what's happened over the last 12 months in the last financial year, and looking at what our 2023 financial year prospects are. So that's the one that's about to start next Friday, actually on the 1st of July. So what are you expecting in your business? And I know that the last few years has been a bit interesting for a lot of businesses. Surprisingly, some businesses have done really well. Some have maintained their norm, and some unfortunately have declined or had to close. But what are you expecting in your business? And I really want you to sort of think about that as we go through the process today, because not only is it relevant for your own take home benefits from your business, but it's also going to help us when we're budgeting sales, when we're looking at expenses as well. And I know that there's a lot of pressures on that at the moment from various ways. We're hearing a lot about inflation and interest rates going up. That's not necessarily a comforting place when we're looking to budget expenses, especially as far out as 12 months, and depending on the industry you're in as well. So I know that, let's say, construction at the moment is trying to budget or forecast out 3 or 4 months is challenging from a supply perspective, but also a pricing perspective when things are changing a lot. So again, like the closer we can get to these numbers now and the closer we can estimate them, the less surprises we're going to have throughout the next 12 months. So please do keep that in mind. The other thing that's a great reminder, and one of the things I remember as an accountant, especially when we went through the first few months of COVID and lockdowns, is this really, really valuable thing called a rainy day fund. Now, a rainy day fund is basically a backup account where if something happens that's bad in the business, you've got this easy to access, pot of cash that can, I guess, essentially save the business in the case that something unforeseen pops up. And we, as a business, we were sharing this concept probably since sort of 2015 or 2016 onwards. And we were doing it at workshops. And one of the really awesome things is we were getting phone calls or emails out of the blue of people who had come to those workshops back in the day. And this is sort of, middle of lockdowns as they just started. And they were saying, "Oh, thank you so much. I just wanted to send you a message. I heard you speak at a workshop, and we implemented the rainy day fund. We've been putting away this money for years now, and geez, it's a rainy day. It's saved our business. We've been able to keep our employees employed throughout those turbulent times. So, I've never seen a better example of this coming in handy as an accountant. But again, it's a really fulfilling part where people do this, and it actually really, really saves them and exists for that purpose. So the idea of a rainy day fund is you start with excess cash, and it's a regular contribution that almost you don't notice. The contribution goes from maybe your main trading accounts over to ideally a separate bank. So it's out of your normal, login and internet banking. You can't really sort of see it build up. We want to kind of ignore it. The target to aim for is about 3 months worth of expenses. And the thought process there is that if your sales turned off for 3 months, will you be okay? Will your business be okay to fund those expenses and keep everything going throughout that time? So that's the whole reason of 3 months expenses. And in that 90-day window or 3 months, hopefully you're able to do something to turn that around or work that out. Now, that's a pretty intense example. It was a reality for some people, even just a couple of years ago, where their sales turned off and did not start, maybe even for longer than that. But even if it is a slow or small downturn, you've got that cash buffer in case you need it. So there's some sort of overarching principles I want us to keep in mind as we go through today. If anyone does have any questions who's joined recently, feel free to just pop them in the chat box or the Q&A section, and we can run through them as I go. Now, in terms of the actual budgeting process, again, I reflected on what I do at Inspire and the process I go through, and I feel like I've got better and better at this as we've grown or grown up more so, more years in business. And getting better at this as well. So the first key, I think, is having a cracking chart of accounts. Now, I've got a whole slide of this on this topic, and I'll actually dive into the Xero demo file where I can go in and show you exactly like what that looks like. What does a cracking chart of accounts look like? What are some of the pitfalls or the shortcomings I see in how people have their Xero set up, or maybe their accounting file if you use MYOB or QuickBooks? But it's important to have a cracking chart of accounts, and I'll go into a whole heap of detail shortly. The other thing we need to keep in mind is we want to estimate every expense. Now, this is a tedious process. It absolutely is. As a business owner, I do this 3 times a year. So we budget in 4-month windows. So 4-month windows, there's 3 of them in a year. So I'm doing this process 3 times a year. Now, it does take a couple of hours to go through, but again, it gets faster as we go, and the more times we do it. But what it does is it's an opportunity to check in on, are your expenses appropriate? Also, sometimes we pick up subscriptions we no longer use and we can cancel them, or, we might have we might be paying for a high level of subscription and we're able to reduce down to the next tier. So it is another opportunity just to check in on our ability to reduce those expenses, or again, with inflation, with costs rising, petrol prices, all that sort of stuff, do we need to actually estimate upwards, which is, not fantastic, but that should obviously have an impact on the sale price to our customers. If our costs are going up, ideally, we want to make sure we're not just paying for that's on charged in a way to our clients, and not necessarily saying, hey, this is an inflation charge. But obviously, if our costs go up, we're going to make less profit if we leave our prices the same. The other thing that's important in a budget is making sure we add in our own salary or our own earnings. And my own perspective on this is we want to add in a market rate salary and then also a benchmark, sort of industry benchmark profit. So for instance, if you're to replace you as a business owner, and I know you might work, 60, 70, 80 hour weeks, but I kind of need to find the balance there. But let's say to hire an accounting firm partner, the guideline is about 150K in terms of wages or salary. And so for me, I want to go and put, let's say, 150 grand in, or divide that by 12 because I do a monthly budget. To make sure I've got that initial benchmark in there. And then the next step as well is to add in a industry profit. So, there's ways to look up your industry benchmarks for this stuff, but let's say your industry benchmark is 25% net profit after your own salary. You want to make sure your budget incorporates that, because we're not here as business owners to take the risk we take and work those crazy hours and all of that stuff from time to time without actually making a profit on top of what we could get as a salary elsewhere. So I do want to make sure that these are important steps, and then also debt repayments. So, if you are repaying debt, whether it's tax or business purchase debt or vehicles or assets, whatever it is, making sure we're actually considering those in our budget. Now, they are usually balance sheet movements. So we don't see loan repayments as accountants or as bookkeepers. We don't often put them on the profit and loss statement where we, that's where we budget in zero in the P&L, or profit and loss. So we want to make sure we don't miss these balance sheet movements like debt repayments. Otherwise, we're going to not be able to, if we're budgeting without them and we hit our target, we're not going to be able to pay these as well. All righty. And I think there's a missing sentence here. That will provide you with the magic number or the total sales you need to make sure all your expenses are paid, you're drawing a salary, you're taking a industry benchmark profit, and all your debts repaid. So that's a pretty decent situation to be in, is making sure all those buttons are ticked. But again, we're kind of working backwards. Is if we make sure we've covered all of that, that will give us our sales figure. Now, the other thing you need to do after working out that how much you need to bring in sales is, can you actually achieve that from a delivery perspective? It's a very important thing. So let's say you do all of this and the figure is 50 grand a week that you need to bring in. You need to make sure you've got the team and capacity and ability to go and deliver that 50K worth of sales a week. And if not, we need to go back to the budget and work out, well, hang on, I can only work out how to bill 35 grand. So we need to shave off 15,000 bucks a week. That's a fair bit of cash. But again, these are the thought processes that we go through as accountants to make sure we're not just aiming at a crazy cool number, but not being able to ever hit it. All righty. Now, working out what we do to have a cracking chart of accounts. Now, I've got a couple of notes here, but detailed is better, and I'll show you what I mean by detail. Lots of sales accounts, wages split in delivery versus admin, and expenses in detail. So I'm actually going to switch over to Xero. I'm going to share the screen on Xero, and we will go through some cool things over there. Again, this is where I want to keep people. So I don't want to lose anyone when I go into here. So please bear with me and feel free to ask any questions. So I did see a Q&A. Sorry, Susan. I'll just go back to the slides. Susan has asked, can I explain what you mean by adding profit on top of salary? Do you mean profit in the business or the profit that your role contributes? So, Susan, my context there is in terms of profit as a business. So let's say the accounting industry, I'll use that as an example because that's what I'm in. Let's say the benchmark is for every $1,000 of sales we bring in, 25% of that should be net profit. I'm just using round numbers here. So we need to make sure we're not just covering our expenses and then covering enough to pay your own wage. You're actually budgeting in a industry benchmark profit as well. I hope that kind of clarifies what I mean there. So it's not just your direct contribution, it's the business as a whole. Alrighty, so I'm going to jump over to that Xero now. All right, so in Xero, hopefully you're able to follow along if you want to log in as well. But in the reports section, we're going to go into here. And down here, we can see Budget Manager. Now, if it hasn't got a star next to it, I do want you to hit the star, and that's going to save it to the favorites list here. So the starred reports, and we're going to come back to that in a sec as well. Now, the next thing we need to do is to go into our chart of accounts, and we do that by clicking on the top here and going into settings. Now, this is sort of normally what accountants and or bookkeepers would spend their time in and tweaking and changing. So like a bit of a warning that if you press the wrong thing here, it might stuff something up. But again, I'm just going in here to show you the context of what I mean by a cracking chart of accounts. So normally in Xero, what we see when we set up a Xero file is there's literally one sales account. And I've gone in and done tweaks to this before the webinar today. But what we don't want to see is one sales account where you've got multiple products that you sell. So one of the first things we do when we help our clients with this, we call it total financial control. It's our CFO style offering to businesses. But one of the first things is we really map out all their different categories of sales accounts, and we actually set up a different account for each one. And that's going to help us when we look back at our reports and see what's growing in terms of our sales, what's not working or not moving much. And we're able to see trends over, months or years for our different sales items. On the slide before, I mentioned lots of sales accounts. I would imagine we've got about at least sort of 30, 40 or 50 somewhere there. I haven't counted them exactly, but we've got about maybe 8 categories, and within each category, we might have 3, 4 or 5 different subcategories there. So we go into a lot of detail ourselves. But again, the more detail you have in this section, the better quality of understanding you get from looking at your reports. Rather, like what we don't want is business owners to just glaze over when they open a profit and loss statement and it doesn't mean anything. These need to tell a story, and we don't want it to just tell a really high level story. We want to really understand what's happened in the business. So, sorry, we are on the chart of accounts. We're just having a look at sales accounts. Now, we can look at this by going into all accounts, and it lists every single account that you've got there. Otherwise, you can group what you look at. So revenue, for instance, these are all the sort of sales and revenue accounts here, just separated out. So make sure you're comfortable that sort of all your sort of different business lines and categories are there. Now, Karen's asked a really, really good question. So if we make changes to our chart of accounts, how can we be sure we can still look at year-on-year comparisons looking back? So my guideline here is don't delete any that exist already. So see in this sales account, we can see year to date's got 53 grand. I don't want to just go delete or archive, otherwise that's going to be a bad outcome. But we want to have a starting point, and actually a new financial year is a great time to make this happen. So let's say from 1 July, you're going to use and spread out all your income over the new categories you've created. Same with expenses. Have a cutoff point is the guide. And from that point onwards, you're going to really go into granular detail with your reporting. Now, for your year-on-year comparisons, if you want to go back and recode these transactions that have already been lumped into, let's say, only 1 or 2 or 3 different sales accounts, you can spend the time doing that. It'll be tedious, and it may or may not be worth it for you. Otherwise, you just draw the line in the sand and say, from anything now onwards, we want to use the granular going forward. So I'm going to kind of leave that with you to make the call on it. How important is that previous stuff? And again, the better our detail of the past, the easier it is to forecast the future. Hope that helped, Karen. Alrighty. Now, in terms of the expenses side, now here's also very important to make sure we go granular. So this is a very standard chart of accounts. There's about, I don't know how many there is here. Maybe there's about 50, 60 accounts here. I don't know how many we've got, but it would easily be over 100 different expense accounts, and just some guides on the type of things I look for. So in terms of wages is a big one. Because we're a service firm, we've got a delivery team, and the key I want to share here is in terms of how your reports show up. I personally have a separate wages line and superannuation line for every single team member that we have. Now, that makes it really easy to forecast 12 months ahead because our team, get pay rises from time to time. Some people leave, some people join the firm. And we also want a capacity plan. So for instance, our budget includes hiring people throughout the year. So in 3 months' time, I want to be able to show that there's a new accountant joining the team and roughly how much we're budgeting for that person. So we'll actually put that into our detail. And again, even our wages and salaries line, we literally have, close to 20 wages, and we break it down per person. Same again with superannuation. We break that down per person. Now, that is extremely granular. Again, it's up to you if you want to go that deep. I would recommend it because then I can start grouping those people into different teams as the business grows. We can have a team Riz and a team Sakshi and all the accountants that work within them. We've got marketing separate, administration. It makes it really easy to get great numbers and see how those trends work over the different months, quarters, and years. But if you want to go the higher level, I definitely would still recommend separating out your delivery team's wages separately from your administration. So those two separate, and then even yours separate again. So if you pay wages through your company or trust, then make sure you've got your own wages separate to that again. Now, the key to doing that, and I won't show it on the webinar today because it is extremely detailed on how to set this up. But in Xero's payroll software, you can actually go and set up so that it automatically posts to those individual accounts based on their wages. Again, that is something we do as part of our total financial control service. We go and settle those account codes up and make sure that when you run your payroll every week, fortnight, or month, that it actually posts to those specific accounts. And you can show, even on a person basis. So I don't go and recode it every month myself. When I post payroll, we do monthly payroll. As soon as that's posted, that fills out all the expense accounts that I've set up here. But at a high level, just jumping back a few steps, we want at least your own wages separate from your delivery team, separate from your admin. That's kind of the guideline there. Now, I've also made a note back on the slide, which you can't see at the moment, but the next point there is making sure your expenses are in detail as well. Now, a really good example of this for us is subscriptions. So we would have, even just in subscriptions, I'd say we'd have 15 to 20 accounts just in that. And literally the way I code it, and you can see my sort of coding system, in the chart of accounts, every account needs a number associated with it in Xero. And then to avoid creating this sort of mess of account codes, if I've got multiple subscription things I want to set up, I just do it as 485.1, 485.2, just to sort of keep that consistency in numbering. And I will literally go and separate out each different supplier, a supplier level. So like I do with wages, it's to every single team member. Most of our account codes will be split by supplier. Again, it's a lot of work to set up, but in terms of an ongoing perspective, with bookkeeping, you can set up rules. So if for instance, if I receive an invoice from Inspire Accountants, that's going to automatically get linked to accounting-inspire, if that's the level of detail you want. Same with this. If we get an invoice from Xero, it goes to subscriptions-Xero. So the setup is the intense time, but the running of it, if you've got the system set up well, it's not a huge amount of additional work ongoing. But again, the clarity that you get from looking at a profit and loss statement and being able to see this stuff, you're going to easily pick up anomalies or, missing months if they're not there, or, double ups, or if a supplier's charged you twice for something. This is going to be so obvious if you go on this sort of granular detail. And personally, if I was to lump subscriptions in one item line, like the Xero template chart of accounts gives you, I'd have no idea without sifting through every transaction and just, it's not going to mean as much to me. But again, like some of these suggestions I'm giving you might be intense, but they are amazing to be able to run the business and to clarify your budget. Another example of that is our project management software. I haven't done it as an example here, but it's called Carbon. Now, Carbon charge a per head seat price. So I think it's like maybe, let's say, $30 a month per person. And if we're hiring new team members every, let's say, 2 months, then yes, we've got wages and salaries to budget, but so do our subscriptions increase. So again, but let's say Canva, that's something that does not change depending on how many people we have. So I can go and budget for those increases in those the subscriptions that change per seat versus the ones that are a flat charge. Bianca has asked, do the chart of account numbers matter or are they personal? So Bianca, they aren't across the board. So Xero has a different formatting or numbering template to MYOB to QuickBooks. So there's no consistency there. And really, as accountants, we don't really care what it is. It's just a little bit tidier. And so how I kind of do it is if there's multiple let's say subscriptions has, 5 or 10 different sub accounts, I just put them as dot and then whatever the number is next to them, like that. But again, as accountants, we don't log in and look up account code 507 and go, oh yeah, that's always this account. That's not the case. Same with bookkeepers. And with cloud accounting and software like it is now, I'll give an example of this. So if I go and create so if I go and create a new bill and I go to the account code, yes, I could probably type in the account code, but software is so good now, I could just go, well, hang on, that's a Xero invoice. So I type in the word or the account name rather than the number. It's a whole lot less to remember, and then just hit tab and it's already picked that up. So yeah, great question, Bianca. Don't be worried about the numbering too much. I just kind of try to keep it a bit tidy. That's all. But again, I don't feel like there's a benefit to that anyway, apart from my OCD can relax. So yeah, hope that helped. What else do we want with expenses? So again, we can do different categories in Xero, and categories is another way you can separate your accounts with and tracking with Xero. For instance, if I wanted to separate Team Riz's, what's an example here? Team Riz's Zoom subscriptions separate to Team Sakshi's. There's ways I could do that if I wanted to. You can do that there's a feature in Xero called grouping or categories. Although I haven't used it yet personally, all I would do personally is actually set up, subscriptions-Zoom-Riz. and do it on that granular level. Now, the reason why I would do that is because you have a lot more flexibility to customize how your reports look. And if you wanted to report on teams, having it as a separate account rather than a separate category. And again, there's not too many clients that use categories in Xero. And I just recommend maybe against it unless you've got a strong need. You might have 5 different locations that you want to report on. Again, you could approach it and have, subscriptions -0 -location 1, location 2, and so on. Personally, I would probably prefer that rather than lump it into categories. Same with sales. When we looked at sales, you could group, and even on reports, you can have sales A, B, and C grouped separately from D, E, and F without having to set up the complexity that the tracking categories function in Xero gives you. So I'm actually not going to even show that here. If that's important to you, then we can have an offline chat about that. Alrighty. What else do we want to know about chart of accounts? Again, feel free to send more questions through as we go. I'm just having a quick look through my notes. Yeah, subscriptions are huge. Travel, personally, I want to report on travel in different states separately. So that's a preference I've got. So I've got travel-Queensland, travel-New South Wales, Victoria, and so on. If we've got different travel there. Yeah, I mean, without pulling up my chart of accounts, that's the sort of thing that comes to mind. So anonymous question, we've got, what do the locks mean in the left column? If we hover over that, that's, so I'm pretty sure these are, yeah, you cannot delete or archive these accounts. So this will have a repeating transaction, let's say, in it. And there are certain accounts you can't change, like depreciation, because they're used by another function inside Xero. Even on the asset side, I'm pretty sure accounts receivable will be one of those. Inventory, so Xero has a stock feature, so you manage inventory through that stock function rather than mucking around here, because otherwise if you go and delete or archive this, then that, if they didn't have that lock function, then you'd go and stuff around with the the inventory or the accounts receivable module within Xero. Alrighty. Now, where are we going to go next? So in terms of the next step, once we're really happy with our chart of accounts, now we want to go to the budget manager. And if you starred budget manager as a report before, you should just go there and it should show up as one of the starred reports. Now, in terms of how we do this, we want to have a look at the, you can actually set up multiple budgets, but let's just stick with one to be simple. Now, the start of it, that was defaulting to July 21. We're about to start July 22. So what I would do is have the start date as next month. The period I want to budget for is 12 months. And you can actually have a look at the actuals, so your results to date, and you can choose how much of that you want to see. So I usually go with 3 months. If I hit update, now there's a few ways to do this. So I'm just moving my screen around a little bit. We can go wide view. So you can actually edit your budget within Xero. And you can see there's already some budgeted numbers in the Xero demo file. And you can play around, let's say advertising is $1,000 a month, but then we want to say adjust by an amount each month. So let's say advertising is going to go up by $50 a month. We can apply that and you can see it increase incrementally month to month. Or let's say, what's another, like commission? Let's say we're going to pay $200 worth of commission to someone. If we hit this up, we can say apply a fixed amount to each month, and then it goes and fills in the remaining columns. So cool. Now, this is not the way I budget ordinarily. So I'm going to hit save on that. And I'm going to use this feature here. So export, and I'm going to get it into Excel. So I'm just going to download that one. and open it up. Just give me a moment. Whee. All right, so hopefully the Excel file is showing on my screen now. And my process of budgeting, again, I'll usually have some, sorry, first thing is enable editing. Whoops. There we go. So we've got to enable editing for the Xero file. And then I'll usually have some draft numbers in there. So like the Xero demo file has some numbers in there already. So the first thing to do with anything that exists in there at the moment is just make sure that it's, it's appropriate, because you might have set the budget for that, a few months ago, and it may be the same or it may no longer be relevant as well. So let's say, we're no longer going to have a $50 a month increase here. We want it just to stay at $1,000 a month. We can just drag that across, and then it all changes to $1,000 a month. And again, we go down to wages. So we've got admin and delivery wages. Another little tip with Excel is to just click on the row underneath the headings here, and then hit this button called Freeze Panes. That should work. And so when you scroll down, the months will stay locked at the top. So let's come down to subscriptions, and we go Canva. Well, we need to budget for that. So that's going to be $20 a month. We're going to drag that across for the next 12 months. So that's going to go through to June 23. HubSpot, that's an expensive subscription for us. Xero is going to be, they're putting their prices up at the moment. That's going to be, $109 a month. PS, these are the GST exclusive prices that we're going to budget for here. Zapier, I don't know, can't remember how much that costs, $25. So once we've got our numbers there, again, we can bulk drag them that way, and it fills up the rest of the rows. Telephone and internet, $250. So again, this is the process of budgeting. Admin, so there's nothing in admin wages, but let's say we've got someone at whoops, not that much, $5,000 a month. And then we've got delivery at 14,000. Let's imagine we're hiring someone in October. So what we would do is say, again, if you've got a separate account code for new people, that's my own process, makes it nice and simple. We just find where that person fits and goes and adds their estimated salary in. Otherwise, if we're going to use bulk, just do delivery wages separately in one category, then we go and add the forecasted wages in here. So we might go 14,000 plus $5,000 for that month in additional wages and go forward. And let's say we're hiring another person in February, we go and add another $5,000 there and drag it on. So we can see that our expenses we've really considered, and they are going to grow throughout the year. Again, inflation, I'm going to use it as an example, but let's say general expenses, we expect to grow by, 0.5% a month. Again, it's the example I'm going for here. We go, the answer to August is July's times 1.005. So it's going to go up by 0.5% a month. Building on itself. So by the end of the year, we expect that price to be at $211. It's a lot quicker to be able to go and drag things around in Excel versus do it in that budget manager software. It is okay in either. It's just whatever you would prefer to work with. And again, a level up on this is actually getting accounting or bookkeeping people to help with this stuff as well. It might make it a touch easier again. Now, a few other things to notice here. We've seen numbers right up to March, but nothing in April, May and June. We want to make sure that we're budgeting for the full year as best we can. Obviously, the closer we are, the closer we are to today's date, the more idea we'll have. But yeah, always working out what's the forecast look like here. Now, if we go down here, down to the net profit section, imagine we've incorporated our debt, our profit, our salary we want to take out. And then we have a look down here and we see negative amounts here. Now, that means that this business is going to run at a loss if we don't do anything about it. So what we want to do, an easy way to work out how much sales you need to provide for this business, is to literally look at the total expenses and just make sure we don't miss any cost of sales up here. But so the way I do it is, and sorry for this level of detail, I do hope I'm not losing anyone, but we want to add any expense subtotal. So we've got total operating expenses, and then we want to add in total cost of sales. So this is the total outgoings each month, drag it across. And again, we copy that one, and then use this function called paste special. And I want to paste the values, not my formula I just created there. And that's going to take, what that's going to do is give us our sales figure, our total sales we need to make this happen, with the idea being our net profit on this budget, on this profit and loss, will be 0. Not that we're going to break even, because we've added our profit and our own pay and our debt repayments in the P&L up here. So we've already taken that into account. So I don't want you to look at this and go, hey, hang on, I'm not making any profit here. That's not the point. We're trying to budget of how much sales we need to make everything happen. And literally down the left-hand side here, we would have expense items or things that say debt, owner's pay, profit, that sort of thing on the right, on the left-hand side. I haven't done it in this example, but we would have that. Now, once we're happy with our budget, we hit save. I'm going to shift back to 0. Back to the budget manager. And then we'd hit this import button here. We already exported it, so we just find the one we just edited, import it, and if nothing's gone wrong, it should be pretty straightforward. And you can see that they're the figures that are increasing because we added in hiring people along the way. Cool. Right up to, yeah, our sales are picking up more and more. So that is a very quick overview of the process that I personally use to budget and work out how much monthly sales I need. And we do that on a quarterly target as well. And that gives us the clarity of, you know, how many sales we need to hit. Literally every week we report on that. So we've got a weekly magic number of sales we need to hit. And every day we'll say, okay, if it's $20,000 for the week, we're currently at 7.5 out of 20K. And that gives the team the clarity. And if we're short, then we need to sort of push hard to make that happen so that cash flow is consistent. Or if we're ahead, we know we're on track. So yeah, that is the guide on budgeting. And that was a lot of information. It's very accountancy. I'm aware of that. So I do want to hope riveting stuff. Thank you, Emily. That makes me feel so much better. I do want to know if it's actually helpful. So please let me know if that has assisted your understanding of the budgeting process. Just pop me a note in the chat box. Please, more than Emily. Come on. All right. Now, jumping back to, thanks, Bianca. Appreciate that. All righty. So I can see I've seen a couple of questions, Susan. I might just keep working through and then we can come back. Yeah, and similar, Karen, I'll do some Q&A towards the end there. All right. So the next steps are, we need to actually review our reports. Thanks, David. Appreciate that. We want to also make sure there's this thing. So we've talked about detailed chart of accounts. The other thing I want to mention is cash versus accruals. So what I mean by this is sometimes you get caught off guard. Let's say if you pay your insurance annually, and I'm going to pull a figure out of the air. Let's say your insurance bill is $12,000 a year, and you pay that every year, once a year. Now, from a cash flow perspective, that's a once a year payment. And if we include it in the profit and loss in the month that you pay it, you'll have this huge increase in expenses for that month in insurance and then zero for the rest of the year. Now, that's reporting on a cash basis. But what I want to encourage business owners to do is think in an accruals way. What I mean by that is, in reality, your insurance is costing you $1,000 a month. Not 12 grand a year, but it's $1,000 a month. I know it's the same thing, but the whole point is when we think accruals, we're thinking a true profitability in our month. And again, if your bookkeeper is currently doing that and reporting your annual or your quarterly expenses and showing them every month, that's a fantastic thing. If they're not yet, then that's a good tweak to do. It's a bit advanced compared to cash, but again, as a business owner, you go, okay, cool. Well, I didn't have to fork out the grand, so to speak, that's showing in the P&L, but I know that I do that every year, so I need to include that. So I'm not having this seasonally huge expense in one month that I haven't accounted for the rest of the year. The other thing we need to do as business owners, and this is where I want to get to with this level of detail in reporting, is being able to make sure you can explain pretty much everything going through your profit and loss by looking at it. Now, sometimes I have to go and look at the detail in an account, but I want to make that the exception, or what's often the case is there's something wrong with it. There's something wrong with the reporting and there's a date that's wrong, or we need to move that to another month, and then it's fine. We really need to be able to explain what's going in and out of our business. The worst thing is to look at your P&L and go, I don't understand this. Really, it's your sales that are coming in, less your expenses, and that should tell the story of your business. Now, I don't think Alan Joyce, the CEO of Qantas, looks through all the detail in his P&L every month. That's a bit silly, but we work with business owners where they're multi-million dollar turnovers, and they're still doing this stuff. Like it's critical. And I feel like the more you spend time in the detail of this stuff and looking at it and making decisions based on great, clear numbers, the better outcome you'll have financially, and the more profit you'll be able to make because you understand the levers that are moving it. So, yeah, the idea is to be able to explain what's going on in the P&L. Some other points. We want to have a look at the budget versus actual in your profit and loss. So once you've input your budget into Xero, you'll be able to run the I think it's called, I'll just double check. It's the budget variance report. Yep. So in the reports, in the accounting menu, there's reports, and then the budget variance is the one that actually compares your actual result, let's say for June 2022 versus what you budgeted, and you can see the difference. And Xero does a great job at highlighting the difference, red or green, if you're better or worse. Also, when you're looking at your P&L, we want to have a look for consistency between months. So have you got regular expenses? Does that make sense? Or things like double ups. So sometimes if a subscription bounces and it's paid a week late, it might fall into the next month. And so in the next month, you've got two expenses showing up. So we want to go and fix that from a bookkeeping perspective. And again, that's working with that accruals mentality, not when the cash is paid. Missing months is another warning sign. Hey, something's wrong. Did you forget to pay something? Or again, is it just the bookkeeping that needs to be adjusted? Annual expenses showing in 1 month. So that's the insurance example I gave. There's lots of other examples. The other one is fluctuations due to currency. So we pay a few things in US dollars. The US dollar has gotten a little bit cheaper over the last year. And so that's actually reducing our net expense in Aussie dollars in our P&L. Again, it's just something to note and to be able to go, oh, okay, that's coming down because of that reason. Again, that's the goal, is to be able to understand what's going on. In terms of the balance sheet, some good things to check. Any stale accounts receivable. So, stuff that you haven't followed up if the person hasn't paid, or stuff that's no longer there to be billed, like an invoice that was raised by accident that hasn't been removed at a zero, or to debt collect or record it as bad debts. Same with accounts payable. You might have forgotten to pay something. The person hasn't followed you up, so you forgot about it. It's an easy check to do in Xero is to have a look at your accounts payable to make sure that's on track, and then having a look at your liabilities. So if your bookkeeping's done correctly, Xero should show you current GST owing, current superannuation that's owing, that's due every quarter, things like that. So we can actually go and see that in Xero pretty easily if everything's quite decent. Final budget tips. We're almost there. So make sure your budget's in your accounting software. You can do your budget variance reports every month to have a look at that. Ensure your team knows your sales targets. That's great because it's not just all on you as the business owner. If you've got that weekly sales number, you share that with the team. I could go and spend a whole hour talking about that and how we engage the team in that, and work out what KPIs each person has in the business to make that sales number happen. Review your budget versus actual month. I did mention that already. And review your sales target weekly or even daily. So we have a weekly magic number of sales, and we report on how we're going throughout the week every day. That's our rhythm. Now, I did cover a lot, and I do acknowledge it's a bit of detail. We do help our clients one-to-one with this stuff, if that's the sort of help you want. Otherwise, there's no harm in implementing this yourself, as long as you don't get stuck with anything. But if you are a client and you do want some help with this stuff, we call this service Total Financial Control, and we literally help set up your whole Xero file with you. We customize and create a cracking chart of accounts, as I call it. We detail all those wages, set up your payroll to work off that. And even do your 12-month business budget with you, calculate your magic number. I've seen a couple of questions around profit. How do we do that in our budgeting? That's what we help you with, and we even sort of help you work out what your industry benchmark might be. And then with your cash flow as well, we even give you some guidance on how much to set aside for tax for the whole year, how much to manage your debt levels if you've got debt, and making sure you've got some stuff for those critical overheads like salary, rent, anything that's sort of really critical in your business. There are a few other things we check and do in there too. Even as part of that service, we give you a business valuation estimate as well. And we also check in on that over time if you want to work with us in that service. So the goal there is to grow your business value. That is the overarching plan there. So yeah, if you do want to know more about that service, then I think the team are going to pop a link in the chat box to this form. This isn't signing up for it, but if you do want to have a conversation with one of our accounting team about it, you pop your name and email and phone number. Even if you're a client, what we'll do is get you the accountant that works with you to reach out and have a conversation around how we help with Total Financial Control. If you're not yet a client, we do have a higher price for that, but we can and we have helped out people who aren't working with us on a tax perspective to implement this stuff as well. There is also some accountants joining as well. So if you are an accountant and you want to have a conversation about how we do this for our clients, we can also talk about that too. Cool. Well, that kind of brings the formal part of the webinar to an end. I do have a couple of questions I'll go through shortly, but feel free to have a look at our webinar recordings and any other video and content we do. We actually share that a lot on YouTube, Facebook. There are two main channels, but we do also have an Instagram account. Where we do have tons of resources. I regularly refer that when I get asked questions from clients or team. Usually we've done a webinar or have a short video on what we've discussed there. So it may be helpful for you. And I know we've also talked about the total financial control opportunity to reach out to us. But if you do want to have a talk to one of our accounting team about high level, whether it's tax or tax planning or 30 June, that's coming up in literally 6 days, then the strategy call pathway is the best for that. So you can book in as soon as maybe even this afternoon or early next week if it's urgent, to have a chat with one of our accountants about how we could help your business. So thanks for joining. I am right on time. I will just go through those Q&A, those questions I got throughout the ones I didn't get to. So Susan asked, so where do I look up the benchmarks? We've got a subscription that gives us a fair bit of that stuff. You may also be able to find industry profit benchmarks. Thanks, Winnie. On Google, there are some like IBISWorld, but again, that's usually like a higher level business that they're looking at. But yeah, we do have software and a subscription that gives us that information. Susan, is the budget the same as a forecast? It's funny. I prefer to use the word budget. They're similar things, and there's also so many different ways accountants or CFOE people forecast or budget. This is ours. We use this in our own business. It's worked really well. It gives me so much clarity. So I'm not sure exactly what other people would call it, but this is budgeting in the easiest way I understand. And again, our team get involved in it. So yeah, I'm not sure what we'd call it from a third party perspective, but to me, I mean, it's literally using the budget feature in Xero. And there is forecasting add-ons you can get with Xero that take your budget and turn it into like a cash flow forecast or a three-way forecast. I've heard of that terminology used as well. But again, it relies on your Xero chart of accounts and your budget being really, really spot on. So yeah, I hope that's helped. Thank you. Karen, can you say again how your profit is included in the budget? So literally, I have an item in the budget that's called profit. That's like a profit target. I actually call it drawings, not profit. Same thing, different terminology. And I literally have a budgeted number for how much I want to take out. That's based on a industry benchmark of, you know, if we're 100 grand of sales for the month, we should be taking 25K in profit. So that's where that number goes in that line. So you missed the practical how-to steps in Xero. There will be a recording, Karen. So anyone who's attended or registered will get a link to the recording for this one. But I do go through pretty detailed in how to do it. But again, if you do need that help, we offer that service one-to-one if that's of interest. All righty. I think that that rounds out the questions so far. I might stay on for another minute or two and pop on some more. I think this radio goes 70s, 80s and 90s. So thank you very much. Thanks, Jennifer. Appreciate it.